Let's get YouTube on here and then we'll get rocking. Thanks for being here. Double tap the screen if you're just joining me. Share this live. What I'm going to do on this live, I just got YouTube on here. So I got TikTok and Instagram over here. Stay here if you want. I can't hear right now. My ears are clogged. I'm sick. Got an ear infection, bursted eardrums, all these fun things. So stay where you're at, TikTok and Instagram, or go over to YouTube. YouTube's probably the better viewing experience. This whole setup is made for YouTube. I just have TikTok and Instagram on my two phones up here. So stay on TikTok and Instagram, double tap the screen, or head to YouTube where you get the better viewing experience. So what I'm going to do on this live is I'm going to introduce myself, talk about the market update, then I'm going to talk about the BRRRR method, real estate, that's what I talk about on here, and then I'm going to talk about how to find distressed property. So if you want to buy rentals, this is a great one for you to listen to. If you want to wholesale, this is a great live for you to listen to. Or if you want to fix and flip, this is a great live because the very first step in all real estate investing is finding distressed properties, and that's what I'm going to talk about today in a minute. So let me know where you're from in the chat box. If you have not, give this video a like. Let me introduce myself, and then we'll get the ball rolling. So my name is Sam. I'm a real estate investor. I own a house buying company here in St. Louis that's going to flip about 300 houses this year. I also own a rental portfolio worth a little over $40 million that I've bought without using any of my own money. And I have 2.1 million followers on social media. So I am in the real estate investing space. I think part of the reason I have that much following on social media is because I give real authentic advice, and it's just real estate related. I'm not trying to sell you anything. I'm not trying to get you to learn about crypto or about e-com or about metaverse or about NFTs. I'm real estate all day, every day. It can be exhausting, but I think it's what you want to see because it is the most likely path to become wealthy real estate. All right, now let's talk about the market. So the Fed's getting ready to meet today. I guess they may have just met. I'm sure interest rates got raised 25 basis points. If not, that would be shocking if they didn't. But the reason the Fed keeps raising the rates is because the market is hot. I think the Fed's pretty much done raising rates. But they're not going to raise rates on a slow market. The reason they are raising rates is from what Jerome Powell's been saying for the last year. He's going to raise rates until the market cools off. The market is definitely cooling, as all the stats have shown. However, if it was really that bad, he wouldn't still be raising rates. And I'm not somebody that thinks the Fed is out to screw anybody over. I think in general, they're trying to do the best that they can with the tools that they are given. So in general, a little bit of market, a little bit of interest rate. If that happened today, I'm sure it just is or did or will. That's not a bad thing. I think the market is going to remain strong and continue to kind of level out. We've seen kind of a rebound recently because it's the spring, becoming spring. That's what happens every spring. People list, people buy, the market heats up a little bit. So that's what's happening, and that's what's going to happen. What?
Somebody said big fan of Jade.
Big fan of Jade? No, you did.
No, it's actually somebody I know.
Oh. Jaden is a knucklehead. Big fan of knuckleheads then. All right, so the market is not going to crash. If it starts to dip too drastically, they will just lower interest rates and everything will be fine. So real estate is, and always will be the best investing strategy. All right, that was a little bit about myself. That's my thoughts on the market. Sorry, Meet Kevin, the world's not ending. What's funny thing about Meet Kevin is he's been calling a crash and the crypto crash and the universe is crashing and the whole world's ending for years. And then the market is doing good right now in real estate. And I think his video the other day said, the Fed cancels the stock market crash, or the Fed, he can't even say like something's good. He has to use the word canceled. So anyways, Meet Kevin, knucklehead, also, just like Jaden, but he's more of a clown than you, Jaden. All right, so now let's talk about the BRRRR method. I have utilized this method to buy $42 million worth of real estate without using any of my own money. Give me a thumbs up, wave your hand, say hi, whatever, if you have heard of this method in the chat box. Throw that in the chat box. That helps me see what's going on. Buy, rehab, rent, refinance, and scale. Buy, rehab, rent, refinance, and scale. This is the method that I have used, like I said, to buy apartment complexes, single-family rentals, and self-storage facilities, all without using any of my own money. I'm going to briefly go over this method for those of you that don't know what it is. Those of you that do know what it is, this is a good refresher because I've done it like hundreds of times, and I still learn something every time I do it. Every time I talk about it, there's always a nuance or something new I can add to it because it's a simple process, but it's got its nuances and complexities to it as well. So buy, rehab, rent, refinance, scale. I'm going to go over a quick example, but then I'm going to focus on the buy. As soon as I get done going over this method, don't go anywhere because I'm going to talk about ways to find distressed properties. All real estate investing starts out with distressed properties, okay? Whether you're flipping, wholesaling, renting, usually not Airbnb, but sometimes even that. Any type of investment, that you're buying using other people's money, you're going to have to find a distressed property. So no matter what you're into or what you're going to get into, you need to find distressed property. So that's what I'm going to focus on after I go over the BRRRR method. All right. Now, buy. First thing you have to do is find a distressed property to buy it. So like all real estate investing, this starts out with distressed property. So let's say you can buy this distressed property for $100,000. So don't worry about the math. I'm going to keep the math simple for my simple brain. However, this works at higher price points as well. This doesn't only work at certain price points. This works at super high price points as long as it's still cash flow. So $200,000, $300,000, $400,000 houses. So buy it for $100,000, it needs $50,000 in repairs. So I need $150,000 to buy and rehab this distressed property. Again, this is how to buy a single family rental without using any of your own money. This works in apartments and storage and multiple single family. I'm doing this with a 42 pack of single family houses. I did this with a 27 pack of single family houses. I did this with an 11 pack of single family houses. And I've done this probably about 100 times on one-off single family houses. And I've done this with apartment complexes and self-storage facilities. So let's just keep it simple, build a foundation with one house, and then you can kind of play with it from there. That's what she said. Get it? All right, here we go. All right, so what you do is you borrow $150,000 from OPM, hard money, private money, lines of credit, your money, whatever it is. Let's keep it simple, private money. You borrow $150,000 from a private money lender. You take that $150,000, you buy a house, and you fix it up. Buy a house, fix it up, right? Somebody else's money. Now, how do you pay them back now that you bought the house and got it retail ready? What are the steps to pay them back without dipping into your own pocket? The next thing you do is pretty simple. You get the property rented. It's very easy. People are worried about renting properties. It's the easiest thing in the world is to rent a fixed-up property. You're not renting some dump. You have pride in ownership. You're a landlord, not a slumlord. And you just rehabbed a house. You just put 50 grand in this house. So it's going to be brand new kitchens, bathrooms, paint, new flooring. It's going to look awesome. So they're super, super easy to rent. And they're super, super easy to find good tenants to rent to. So you buy the house, fix it up, get it rented. Now, here's where the rubber meets the road. This is where it gets a little bit fuzzy, hence the fuzzy circle. So this is the refinance step. This is the most confusing step, the most complex step. It's really not that bad. I will walk you through it so you understand it. Y'all with me so far? Give me a thumbs up if you're with me. Let me know where you're from in the chat box if you have not. Share this live with anybody you know that is interested in real estate investing. I'm not going to save it on TikTok and Instagram. However, it is going to be saved on YouTube. So head to my YouTube after the fact if you want to, or head to my YouTube now so you're there and subscribed and you can see this once it drops, after the fact. All right, so you bought a house with somebody else's money, you fixed it up, you got it rented, you take it to a small local bank, not your big box banks, they won't do it. Your small local banks, they'll write you a check for up to 80% of the appraised value. If you bought this house at a discount and repaired it, it appraised for 200 grand. And again, we're keeping simple math here. So they appraised the property, they said it's worth 200, so we'll write you a check for 160. They will literally hand you a cashier's check. Wow, I'm just gonna have to redo that because that looks like crap. They will literally hand you a cashier's check for $160,000. Now, what do you do with that check? Any guesses on here? Sorry, I throat's dry, my nose is clogged, I can't hear out of my ears. One ear's pussing like crazy. It's kind of gross, actually. Actually, it is there, T. York. All right, so you take that $160,000 and you pay back your private lender. To keep it simple, it's probably less than that you have to pay them, but to keep this whole thing flowing, you pay them $160. So they wrote you a check for $150. 90 days later, you write them a check for $160. So that private lender, that hard money lender, your own money, somebody's money, a line of credit, whatever it is, just made $10,000 in 90 days without doing anything. That's like crypto style return, great return, but backed by real estate use. So super safe investment. So they made 10 grand without doing anything. So they wrote you a check for $150. You wrote them a check back for $160. They got their money back plus interest. They're gone. They're happy. They're good. Now, you do owe the bank $160,000, but what did you do in the prior step? You got the property rented. The rent is more than enough if you do this right to cover the mortgage, because that's a mortgage now. They write you a check, and now you owe them $160 over the next 25 years. They'll write you a check, and you pay them back over the next 25 years a small amount, and then you pay the taxes and insurance and property management and vacancy. All the owning expenses all get paid out of the rent. This is a key step. Get a good renter in, and that's not very hard because you have a brand new, freshly rehabbed property. So now, you use a private lender, or you used a bank to pay back the private lender, or you use the rent to pay back the bank. Does that make sense? Everybody with me? You use a bank to pay back the private lender, and then you use a renter to pay back the bank. And obviously the private lender is short-term, the bank's long-term. So this is a lot going on here, but this is how it works. And if this is a little confusing or overwhelming, I apologize. I'm flying through this just because I'm wanting to make this one a quick one because I don't feel very good. But I have thousands of hours of content on my TikTok, YouTube, Instagram, Facebook, Twitter, Clapper. I got a podcast, The Faster Freedom Show. So I literally have tens of thousands of hours of free content on social media. A lot of it is geared toward this. So make sure you're following me on whatever platform you are on. Don't worry, I didn't forget about you S's out there. The S stands for scale. I am not going to go over that today. However, I was on Bigger Pockets talking about scaling. I've been on a lot of different podcasts as well as my own talking about scaling, which is a way to scale. I have scaled a flipping company from 120 houses a year to 300 houses a year. I've scaled my rental portfolio from 0 to 42 million. I've scaled my social media from 0 to 2.1 million, all in a few years, all utilizing the scale process. That was the burp. All utilizing the scale process. So there's a process, there's a system. Each letter stands for something. DM me if you want my free training about it. I can send you that as well. All right. So now let's talk about finding distressed properties. Watch what we're going to do here, Tyler. This is going to blow your mind like crazy. Ready? Finding distressed properties. Can you read that? Can you read that? Nope, but you can now. Finding distressed properties. So that's what we're going to talk about right now. I just dropped a YouTube video on this yesterday. So if you want a broken down 8-minute version with editing and looks awesome, check that out. It's on my YouTube. It's just the one about finding distressed properties, top 5 ways. So I'm going to briefly go over the ways and talk a little bit differently about them. But on my YouTube, there's a great video that breaks down in 8 minutes, 5 ways to find distressed properties for free or for extremely cheap. So those are the kind of videos that I'm dropping on my YouTube. I've also talked about them on the podcast, The Faster Freedom Show, all the time. All right, so finding distressed properties. What makes up a distressed property, I think, is the first thing, because, you know, that's what a distressed property looks like. Sad, right? So a lot of people are confused because they go on Zillow or they talk to the real estate agent, and all they see is properties that are retail ready, properties that are on the market or about to be on the market that are asked, you know, retail price or close to it. So how are you going to do this method or even make any money if you have to buy properties at market price? What you're not. You're finding off-market properties that are distressed. There's a lot of them out there. You might not know them because you're not in the industry, but there's a ton of off-market properties out there that you can find. We're going to talk about ways to find them, but let's define it a little bit more. So a distressed property is a property that needs work. There's 2 reasons why property is distressed. 1 is the owner is distressed, and 2 is the property is distressed, and it's usually a combination of the 2. So why would an owner sell you a house at a discount? Unfortunately, one or both of the owners passed away. They got moved into assisted care facility. It's a hoarder house, and you know they don't want anything. That's usually an issue with the owner and the property, but they don't want people in the property. They're going into foreclosure. They are moving. Whatever the issue may be, you know, 95 out of 100 houses that sell on a daily basis, if that's the number that sells on a daily basis, are not distressed. But there is 5% that are distressed, and that's the ones I'm going to teach you to find. So there's a distress with the owner, or usually both, a distress with the property. It hasn't been updated in 50 years. It won't pass any occupancy. There's a big crack in the foundation. There needs 20 grand to, you know, get approved for someone to move into it. So those type of houses do not sell in the open market. Most home buyers scrounge up enough money for that 3.5% down FHA loan, that 10% down traditional loan, that 20% down traditional loan. They don't have an extra 50, 20, 60 grand to put into these properties to make them livable. Those are where we come into play. Real estate investors come into play. Buy them, fix them up, and either rent them or sell them to an awesome family. So that is the key, just understanding that not every house, in fact, probably almost every house that you come across in your current day-to-day is not working for real estate investing with this distressed property angle. It only works for the properties you see are retail-ready properties. So find distressed properties now. Let's talk about some ways to find them. And again, this is in the video. They're going to go a little bit deeper into this, but talk about a couple free sources and then some paid sources. Number 1, wholesalers. If you're looking to buy 10 or fewer properties this year, then I would go 1,000% all in on connecting with other wholesalers. You find other wholesalers by Googling them, looking them up on Facebook, local Facebook groups, going to your local meetups. Find find these wholesalers. These wholesalers is what they do is they send direct mail. They cold call, they find distressed properties, and they don't close on them. They sell them to real estate investors like you and I. They either have the money or borrow the money from somebody else to pay cash for them. So wholesalers should be your number one option if you're looking to buy. I mean, no matter what, you should buy wholesalers. But if you're looking to buy 10 properties this year or less, go all in on finding wholesalers. Again, go to your local meetups, join local Facebook groups. Those bandit signs you see on the side of the road that say we buy houses, those are all wholesalers. Take pictures of those if you're at a stoplight and call them and text them and get on their buyer's list. There's just, most markets have hundreds, if not thousands, of wholesalers, all doing a few deals a month. So you can connect with 5 or 10 wholesalers and you'll have unlimited deals for the rest of your life for free. The other option similarly is real estate agents. Earlier I mentioned that real estate agents are a good source for retail-ready properties, but a good real estate agent is going to, transact on 20 houses a year. 1, maybe 2 of those they're going to call you for. The other 18 or 19 are retail ready. They're not going to mess with you on it all. They are just going to, sell those on the open market. But those 1 or 2 a year that are distressed and need to sell quickly, if you get in contact with 10 real estate agents and befriend them and get to know them, that's 1 or 2 leads a month, probably a couple buys a year from agents. You don't have to pay $1 in marketing for it. So that is the kind of free ways to do it. So those are the free ways. So paid ways, I mentioned one earlier. One of my favorites is bandit signs. Those signs you see on the side of the road that say we buy houses or we buy your mom's houses. Some of them are printed, some of them are Sharpied, but those are a great way. People drive by them, they see them, they call them. You will get calls from those signs. Now you got to be careful about doing it safely and doing it legally. So I'd use a Google number, not your own number, just in case it does get taken or somebody calls pissed off about it. But either call the bandit signs and get on the list or put out your own bandit signs. You can probably buy 200 bandit signs for $200 and you will for sure get leads from that. You may or may not get a buy if you know what you're doing, but you will get leads from that simple, cheap source. And the second, paid way that's pretty cheap, and in my opinion, there's a lot of ways to do it, let's go driving for dollars. If you want, DM me on Instagram if you want my free training, or I can send you more resources about either of these options. But Drive for Dollars is a great way to drive around and look for distressed properties and be in control of your lead source. If you want to drive for 10 hours a week, you're going to find houses. If you want to buy for 1 hour a week, eventually you'll find houses. But this is a great way for you to drive around and control your lead source. So those are some free and cheap ways. If you're like, Sam, that wasn't enough for me, I want more. Well, I don't have graphics and all this stuff on this live. So just go to my YouTube, watch the beginning and all this, and this is my latest video on finding distressed properties. It's literally the entire video. This is exactly how you do it step by step. So check out that video, and we will see you on the next.